Hi, welcome to the Market Alert for Friday, the 9th of August 2019. So, back in the saddle, and as ever, Murphy's Law. As I said last week, it'll all kick off when I'm away, and it did. But yesterday, stock bonds and gold gain as easing hopes hide global risk. And there is a global risk, there's no doubts about that. So let's get on and catch up over the last few days. So start off with the Dow. This is where all the activity's been. We saw the market move lower, and as ever we get down to the 200 bar moving average and we see the market bouncing back. You can see the short covering going on here. The next day there is indecision, and yesterday is very interesting because you've got the market going up on fresh air. Overnight, the market also stopping at 76% retracement as well, and looking a bit weakish here as well. So we could see a reversal back down to retest the 200 bar moving average as well, unless they actually do something about reducing interest rates. So yesterday on the intraday, the market in the pre-market session was moving up quite nicely. And then we had this beautiful test here of the markets, more or less down to the 200 bar moving average, very high volume. They bought the market and they sent the market to the upside. And you can see that it was just being marked up. There's no buying bars whatsoever. It's more or less all below the average, apart from where you see bits of selling. You can see there that the volume in this market and in the daily chart is only there when there is selling, not so much when there's buying. The bit here as the market tries to turn around and testing, and then they move it up before the close. And then overnight you see the market gap. The gap has now been filled as prices have come back. If we just drag over to the left here, you can see we're within the 200 bar moving average. Crucial area for this market. If prices come back, you want to see them bounce off this if it's going to move higher. And today news, what have we got? Nothing, only the UK today, which is manufacturing production, which is to show a decrease there. And prelim GDP, month by month GDP, everything down. Again, this will be used to blame Brexit when really there is a real global problem, particularly China and the US and also Europe as well. There is a global slowdown, but cherry pick your propaganda, as they say. So on the implied volatility front, let's have a look at this. We can see that we shot up to 20 from 1129. The 1129 is taken from the high. This is something I spoke about in last week's Market Alert. To find 100% increase, to find the bottom stopping point of a market, you take the high point and you take the implied volatility measurement from there, and then you get the market stopping. Now, the other thing that I've discovered is that these sort of volatility moves come in waves. This is the first wave that has taken place. You can see a previous one here where the market came here, came there, and then eventually goes back. So there's still room for this market to move lower. Also, you can see the waves here as well, and as it makes its way back also. So this is just the first wave, and the most I've counted so far is a sort of a 5-wave move of implied volatility to work out where the market's going to stop, etc. And then in this chart here, you can see that we're red at the moment, and we're still below the 20 bar moving average, and the same in the implied volatility. So the market's still indicating bearish to sideways at the moment for this market. Whilst we're here, have a quick look at Deutsche Bank. Came below the 200 bar moving average and is now traded back to it. Let's see if this will move lower, but it's gone out of the news at the moment because the share price is really sideways And this is very interesting. Is when we talk about global slowdown, the inversion of the yield curve is the key. There's no doubts about it. The other day hitting 0.3 or minus 0.3. One of the biggest, what is the biggest spike of this current inversion as well, beating the one back in June there, or end of May. So again, they've not released yesterday's, which I imagine would have moved back up a bit. But yeah, we can see there. This is crucial. This is the difference this time. All of the other corrections in the market have come as a result of the yield curve being normal. It's now inverted, and we know what happens long term when this happens. So keep this in mind. This is why it's a global issue. It's a credit problem. So keep this chart in mind when you're considering the things like looking at the stock market. If we just have a look, bring it back to here. So the pound, just 1 second. When you've seen things like this over time, we've had all these other corrections. Should have loaded. There you go. There's another correction there. Then the yield curve wasn't inverted there. The market's free to move back. But since March, where we had the first inversion, it's just getting worse on the yield curve. So that indicates that there is a problem and the end, as it's always signaled before, an end to the bull market. Meanwhile, in Bitcoin, let's have a step back and have a look. The market's been moving high, been sideways for the last few days, but it looks like the volatility has been reasonable. 4-hour chart, you can see the sideways move there, so it could do with a shakeout to the downside and back to the 200 bar moving average. That would be really good. Get a decent long play on this. Yesterday, some short trades, but they were just blips to the downside. Apart from this one, once it broke the 200 bar moving average, the two previous signals didn't, but this one did, and then reversed back and then shot down. But as ever, we get 76% retracement and then a bounce overnight in this market, and now just approaching the 200 bar moving average once more for the Bitcoin price, a bit like the Dow. And then finally, the pound. We'll just have a quick look, but nothing much to report there. It's sideways in a range. A lot of volume though. This is very interesting. There's a lot of volume in this market at the moment. So I've not seen this. This is in a sideways move as well. So this is quite fascinating. I've only just noticed this. So let's see how this starts to develop. Are they buying the pound? Holding the pound? I don't know. But there's something going on here that this market is being bought back at the 121 level. And yesterday you can see here as well in the smaller time frame this going on also. So once the market broke the 200 bar moving average, it moved lower, but it's found support down at the lows of the range that it's been in for the last few days. Yeah, so let's see what happens today. See if the Dow will hold or whether it will fall back to the downside. And what I would be inclined to do here, just in case, is just click twice with the retracement tool on the price bar of yesterday, the bar that saw the market levitate to the upside, and see if the market comes back down to this level. And there's not really any US news to move the market, so let's see how things pan out as we go into the weekend. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.